Hi there, I'm Monica Gibson and you're watching the Dukoscopy Week Ahead with Nick Stamenkovic from RIA Capital. Nick, Monday is a quiet calendar day indeed, but after that disappointing data from the US on Friday, the greenback's strength is being classed by some as merely a rebound. But how would you describe sentiment at present?
Well, I think we're in a corrective mode in the US dollar. A lot of investors were positioned for a stronger dollar against the euro, not just beginning of this year, but through the course of 2015. And the US economy is disappointed relative to expectations, whereas the euro economy has actually not done too badly. Investors or economists have certainly revised up their growth forecast this year. As a result, you've seen a sharp unwinding long positions to the dollar, and I think that maybe have a little bit further to go. But eventually, once the position is clearer and the fundamentals reassert themselves, as the Fed tightens rates in September and the ECB maintains its policy of buying sovereign bonds around 60 billion per month until at least September 2016, then the dollar should see some move back towards the euro. But clearly the recent fall in dollar has caught a lot of people on the wrong side. And it means that any rally in the dollar is going to be pretty modest. So it's going to be some time before we get anywhere near parity.
It does seem that policymakers are more likely to hog the limelight, with FOMC, BOE and ECB meeting minutes all due. Are you expecting any surprises here? And what do the markets want to hear?
Well, I think in terms of the Fed, the markets will want to see how the Fed has interpreted recent data. The bulk of Fed officials have suggested the slowdown we saw in Q1 was a temporary one, driven by one-off factors. So we want to see confirmation of that. Obviously, the Fed didn't have in its hands the retail sales industrial production figures we saw last week, but that would reassure the markets. But I think the continued low level of inflation means that a rate hike is unlikely to take place before September, and hence I think the Fed is going to vindicate that view as well. Elsewhere, I don't think the Bank of England is going to contain many surprises. We had the inflation report last week, where the Bank of England revised up slightly its near-term inflation forecast, but revised down growth from 2015 to 2017, and seemed to justify or support the market's view that a rate hike is unlikely before at least the first quarter, if not the second quarter next year.
And so the Greek saga continues. Apparently the government will pay public sector wages and pensions in May, but needs an agreement with creditors by the end of the month. But what happens when the IMF starts to get involved? How will this play out?
Well, the markets are clearly unnerved by this. We've seen a renewed sell-off in Greek bond yields following a story that Greece almost went into default last week. Clearly, its room for manoeuvre is very limited. Without getting the bailout from the institutions in the euro area, it's unable to pay the basics and it's unable to cover its debts. I think by hook or by crook, they'll get through the next payment to the IMF. But they've got some significant repayments to the ECB in the summer, and those could present a major hurdle. Economically, Greece is in a really difficult position. Their fiscal position is lousy. The economy's gone back into recession, and the debt dynamics are pretty terrible. But I think politically, the euro area members, particularly the EU, ECB, and indeed the IMF, want to cobble some sort of compromise together. They don't want to have a situation where a president is set with a country potentially leaving the single currency, even though it could benefit the economy further down the road. Potentially, they're not sure what the impact will be elsewhere. So I think eventually it will kick the proverbial can down the road yet again.
The euro hasn't been performing as one might expect given the crisis, but what is your outlook moving forward, perhaps against the pound?
Well, I think the pound obviously benefited from a significant relief rally after the surprise to Conservative majority in the last election, but that's probably gone as far as it can for now. Certainly the Bank of England, as I mentioned earlier, doesn't seem to be in a rush to raise interest rates, judging from the latest inflation report. But ultimately the UK economy looks in a better state than the euro area economy, and I think the pound will remain relatively firm against the euro area, particularly given the fact that the ECB over the medium term will continue to maintain its very accommodating stance, whereas the Bank of England sometime during the course of next year will start to raise interest rates. So for now, I expect the pound to remain strong. I doubt we'll see much further upward movement near term, but over the medium term, the pound still looks reasonably stable.
Nick, thank you. Well, that's all from me from the moment. The team will be covering these events and more, so please do keep clicking back to Dukoscopy TV. Goodbye for now.